All right, let's dive into the numbers behind Indian Hotels Company Limited. You know, IHCL, we've got a whole pile of documents here, press releases, their analyst presentation, and of course the nitty-gritty financial statements. We're going to sort of unpack all that and pull out the important stuff, the stuff you really want to know about their Q2 performance in fiscal year 25.
Well, I think the headline here is pretty clear. They just announced their 10th consecutive quarter of record-breaking performance. 10 in a row.
Wow, 10 quarters in a row. That's got to be some kind of record, especially when you consider the economy globally. It's been a little rocky.
Yeah, no doubt. And even the whole travel industry is still kind of bouncing back, from the pandemic and everything.
Right, exactly. So it's pretty impressive, 10 quarters of growth like that. And looking at these numbers, it's not just a tiny bit of growth either. We're talking significant jumps. Their revenue is up 28% year over year. And their profits, well, they're even better. But there's this one thing that really caught my eye. It's called Rev P, and it's up 12% year over year, which is way above what everyone else in the industry is doing.
Rev PR, yeah, that's a key metric in the hotel world. It stands for revenue per available room. Basically, it tells you how much money they're squeezing out of each room.
So a 12% jump means they're getting a lot more efficient, like they're making each room work harder for them.
Exactly. And it's not just that they're getting better. Their Rev PR is actually 66% higher than the average for the entire industry.
66% higher, that's a huge difference. So it's not just that they're doing well, they're kind of blowing everyone else out of the water. What do you think is driving that?
Well, a couple of things, I think. First off, their brands are really strong. People are willing to pay a premium to stay at a Taj hotel, for example.
Makes sense, they've got a great reputation.
And then on top of that, they're really good at managing their costs.
So they're maximizing profits.
Right. Efficient operations, that's key in this business.
And they're doing some really interesting things strategically, too, like their management fee business. That's where they basically expand without actually owning all the properties, right?
Exactly. It's a way to grow faster and with less risk.
And that part of their business is booming, up 15%.
That's smart growth. They're not just building hotels everywhere. They're being very selective.
And then there's the Ginger brand, which is all about that lean luxury concept. 100 hotels now.
Yeah, Ginger's a great example of how they're targeting different types of travelers.
So lean luxury, what exactly does that mean?
Well, think of it as stylish and comfortable, but without all the extra frills. The things that drive up the price, but that people don't always need or use.
So it's like high quality, but still affordable.
Exactly. And it's clearly working because Ginger is really profitable for them.
It's like they found that sweet spot, right? A balance between giving people a great experience and keeping things affordable.
Exactly. It's a winning formula in today's travel market.
And that's just one part of their strategy. They've got this whole portfolio of brands catering to all sorts of different tastes and budgets. It's pretty impressive.
It is. They're really covering all the bases.
So let's dig into some of these other brands and see what they're up to, and then we can take a closer look at the specifics of those financial statements. There are some really interesting numbers in there.
Sounds good. I'm ready to dig in.
Me too. This is going to be fun. So we've talked about Ginger, but it's not just Ginger, right? They've got this whole collection of brands.
Wow, yeah, they've got something for everyone.
Like their Amam brand with those experiential stays and trails. What's the story there?
Amam. Oh, it's all about unique experiences, off the beaten path kind of stuff.
So not your typical hotel stay?
Right. More like imagine trekking through the Himalayas, staying in charming little local places, really immersing yourself.
That sounds incredible. Not just a hotel room, it's a whole adventure.
Exactly. And get this, they're aiming for over 300 of these bungalows by March 2025. Ambitious, right?
Very ambitious. So it's not just Ginger and Amam. They're also in the air catering business, right? With Tajsats.
Yeah, Tajsats has actually added a nice chunk to their revenue.
And I'm seeing here they've revamped their Gateway brand, too, going for that modern, fresh vibe.
That's right. They're targeting growth in those Tier 2 and 3 cities with Gateway.
It's like they have a brand for every kind of traveler, every budget. But it's not all about just adding more brands and hotels. They're also really focused on customer loyalty with that Tata Neu program.
Oh, yeah. Tata Neu is like a super loyalty program. It covers a bunch of different Tata brands, not just hotels. So you could earn points staying at a Taj hotel, then use them to buy groceries online from Tata.
So it's like a whole ecosystem.
Exactly. Keeps customers coming back for more. And it's working. Look at this. Loyalty-led revenue is up 19% year over year. And get this, 42% of their enterprise revenue is from those loyal customers.
That's huge. It really shows that building those customer relationships pays off.
Absolutely.
And it's not just about loyalty programs. They're getting really high marks for customer satisfaction, consistently scoring above the industry average.
It's clear they're paying attention to the details of, trying to create memorable experiences for their guests.
Okay, let's dive into those financial statements. They hit a pretty big milestone. Their total revenue crossed 3,000 crore for the quarter and a mind-blowing 6,000 crore for the first half of the year.
Wow, those are some serious numbers.
What stood out to you?
Well, Ginger is clearly a star performer, almost 300 crore in revenue for the first half of the year. But what's really striking is their profitability.
Okay, walk me through that.
So their EBITDA margin, that's earnings before interest, taxes, depreciation, amortization, and restructuring or rent costs, has improved by 730 basis points year over year.
EBITDA, help me understand, what does that really tell us?
Basically, it's a way to measure a company's core profitability from their actual operations. So it strips away all the financial stuff and focuses on how much money they're making from their core business.
So a 730 basis point jump, that means their core profit margin has really shot up, right?
Exactly. They're not just making more money, they're making it more efficiently.
And what about Awama, those unique stays? Are they doing well?
Oh yeah, Omama is definitely attracting a whole new type of traveler, those looking for something beyond the usual hotel stay.
People who want to really experience the place, not just see it.
Exactly.
And they made a strategic investment in this company called Tree of Life Resorts. Tell me more about that.
Tree of Life. Oh, that's an interesting one.
It is. What made IHCL decide to invest in them?
Well, they already had a marketing and distribution partnership with Tree of Life, so they knew the brand. And they saw the potential, that demand for those immersive experiential stays.
So they decided to take it a step further.
Yep. They invested up to 18 crore for a majority stake in the company.
And Tree of Life was already doing pretty well on its own, wasn't it?
Oh, yeah. They had 19 properties in 16 locations across India, generating 23 crore in revenue and 4 crore in EBITDA in FY24.
So it seems like a smart move for IHCL, a relatively small investment, to get a foothold in this growing market.
Definitely. And with IHCL's resources and expertise, Tree of Life can really take off.
It's a win-win. IHCL adds this unique brand to their portfolio, and Tree of Life gets the support to grow.
Exactly.
But it's not just about profits, right? They're also committed to sustainability.
Absolutely. They're taking steps to reduce their impact, less plastic waste, more water recycling, promoting renewable energy.
And they're involved in community initiatives too, right? Supporting local businesses.
That's right. It's not just about the bottom line. It's about making a positive impact.
And that's important to travelers nowadays, isn't it?
Oh, for sure. People want to support businesses that align with their values.
Okay, let's talk about their financial health. Those financial statements show a strong balance sheet, healthy cash reserves, and impressive cash flow conversion.
Yeah, they're in a really good position financially.
Break that down for me. What does it all mean?
So a strong balance sheet means they have a solid financial foundation, like a snapshot of their health. Cash reserves are like a safety net, a cushion for tough times. And cash flow conversion, well, that shows how well they're turning profits into actual cash.
So they're not just making money on paper, they're actually generating cash.
Exactly.
Which gives them the flexibility to invest and grow even when things get a little shaky.
Exactly. That's crucial in this kind of industry.
So it seems like they're building a solid foundation for the future. But I want to go back to this idea of experiential travel for a moment. Why is IHCL so confident that this is the future?
It's about more than just, fancy hotels and amenities these days. Travelers are looking for something deeper.
Yeah, a real connection to the place they're visiting. It's about the experiences, the memories.
Right, exactly. And IHCL is really tapping into that. You see it with Tree of Life, but also with their other brands. They're emphasizing local experiences, culinary journeys, wellness retreats.
It's all about creating a story, not just booking a room.
Exactly.
But, we can't ignore the elephant in the room. The global economic outlook is, well, a little uncertain.
True. There are some headwinds out there.
So how might that impact IHCL and all these ambitious plans?
It's a good question. India's economy is strong, relatively speaking, but it's not immune to global trends. Inflation is a concern, and there's the potential for a slowdown in some key markets.
So a little bit of a reality check.
Yeah, I think that's fair to say.
Yeah.
It's a reminder that even with the best plans, you have to be flexible.
And IHCL seems to be aware of that. They're already talking about ways to optimize costs, focusing on high-yield segments, being more strategic with their expansion.
That's a good sign. They're not letting their success make them complacent.
Yeah, it's like they're thinking a few steps ahead.
Right, always anticipating what might come next.
But there's one more piece of this I want to explore. What does IHCL's success tell us about India's position in the global hospitality market?
Oh, that's an interesting question.
It's not just about one company, right?
No, it's a bigger story. IHCL's performance is a reflection of India's emergence as a real force in hospitality.
They're kind of leading the charge.
In a way, yes. India has so much to offer. A growing middle class, a vibrant tourism industry, incredible cultural heritage.
And IHCL is showcasing all of that to the world.
Exactly. They're setting a standard, inspiring others.
It's like a new era for Indian hospitality.
And it's just the beginning.
So as we wrap up this deep dive, I'm left with a feeling of, well, both excitement and anticipation.
Yeah.
IHCL is clearly a company that's doing incredibly well, but they're also facing a future that's full of both opportunities and challenges.
It's a dynamic industry, that's for sure. No matter how successful you are, you can't stand still.
You have to keep evolving, keep innovating.
And never lose sight of what travelers truly want.
And on that note, we'll leave you with this final thought. The future of hospitality is about experiences. It's about creating memories, fostering connections, leaving a positive impact. Something to think about as you plan your next adventure. Thanks for joining us on this deep dive into the world of IHCL